Welcome to the Ag Commodity Corner Plus podcast. It's June 13th, 2025. And this week's title is Grain Markets Anchored by the USDA Weather, Trump, Tariffs, and in our opinion, we think we have some bullish news out today. It's called the new U.S. Biofuel Policy. We'll get into it here in the presentation, but let's start off with the weekly closes for the markets. And you can see on the chart, I've highlighted what was moving the most this week. Soy oil was up over $3. Canola up over 20 to new contract highs. That's for the July contract. We've also got livestock moving again with hogs. That bullish momentum to the upsides accelerating. July up 2. We got live and feeder cattle finally correcting hard this week, but it had more to do with those ice raids in those Nebraska plants. If we've got illegal immigrants working those plants, who's going to replace them? Honestly, these plants need to be automated more, but it's been a third consecutive day of lower prices. So bull market's still intact. Crude oil up 12. We'll get into that. Gold up 117 for the week. We'll also get into that later. Now, before we get started, we had to make a correction from last week's podcast. We showed this map of crop profit. It's a company that tries to project yield forward with local county data and state data, and we said that crop profit was projecting a 181.6 yield for the United States corn in 2025, but that's not the case. It's about 0.6 higher based on the 45-day forecast. But there was a company out this week called Marcus Weather Incorporated that was forecasting 182. If it remains wet through June, I would not be surprised in the July 12th crop report from the USDA that they go to 182 or 183 like last year. So for now, the weather again remains non-threatening for the U.S. crops. Let's start with the USDA report for June.
This week was important because we had this month's USDA crop report. And as far as changes are concerned, USDA did not tinker much. Among the noteworthy changes, they adjusted old crop U.S. corn exports higher, which then reduced ending stocks for the old crop. And thus, we've got lower beginning stocks for the new crop. Besides that, they reduced some of the global wheat stocks, and surprisingly, they left the South American numbers unchanged, whereas some of the private estimates in CONAB had been adjusting the Brazilian corn estimates.
So this was not a market-moving report. It was a non-event. The market-moving reports are going to be at the end of the month. The quarterly grain stocks report, June 1, on June 30th from the USDA, as well as the June acreage report. So both corn and wheat exports were higher. In fact, that wheat export pace for new crop 25-26 is up 22%. It's accelerated, and so the USDA adjusted wheat exports higher and ending stocks came in lower, but those ending stocks on wheat are still too high. And then we've got the wheat production pretty well in line with estimates. I think the USDA is going to wait to make any further adjustments. Harvest is at 4%. In the United States, I think they'll wait for more yield data. With respect to the South American numbers, the same thing. USDA, I think, will wait for more corn harvest in Brazil before they make any adjustments. But we got to think that that is probably going to move higher down the road. And then global, everything was a little bit higher than last month except for wheat, but no big surprises there as well.
Talking geopolitics, this week we had the U.S. and Chinese trade counterparts talking to each other, but Trump and Xi haven't spoken yet. The talks this week were mostly to get both countries back on track with respect to the Geneva Agreement more. We could get more in terms of concrete trade deal, bullets and points once we get the two presidents talking to each other later in the month.
Yeah, but this was a disappointment. Don't you agree?
I agree.
This is taking too long. There's no trade. All the trade deals or wins that Trump talks about is a framework. It's not even a trade deal. So a comprehensive trade deal. Where's the details? By the way, last week he asked for all these countries that were negotiating to put up a proposal by June 4th. Where are those proposals? I haven't heard a darn thing. What do you think is going to happen at the G7 summit? They're talking that Canada may have a deal with the U.S. Boy, who would have thought that Canada would have the first trade deal? But don't you think this is more of a 26 than a 25 story?
Yeah, sounds more like something that we should be looking forward to next year. This year, possibly should be more talks before we get anything concrete.
Well, here's the bullish news. This RVO new blending mandate for biofuel. There's a lot of volatility regarding this, but finally, this is good news. We'll tell you why.
So this week and towards the end of the week, we've been having quite a bit of noise in the markets, or rather quite a bit of happenings in the market. So EPA announced the much-awaited renewable fuels, the volume obligations. And the expectations were for 5.25 billion gallons of biomass-based diesel for the next year, but EPA surprised with 5.61 billion gallons for 2026 and 5.86 for 2027. This is very bullish veg oils, which include soy oil and canola.
This story is bullish. Why? Because it's a key catalyst. The market was expecting something lower, 4.65. Remember, the 24 mandate was 3.75. The trade was, or the industry was requesting a 5.25, comes in at 5.61, 27 at 5.86. So this is bullish, better than expected. Soy oil futures are limit up. You're going to retest that 200-day moving average upwards into that 53 going into next week. If you were looking for a summer rally or a key catalyst that could get a summer rally going, this is it. Sometimes it's weather, sometimes it's something else. This time it's something else. But if you go into next week and you start to add some weather scares, maybe it starts with the U.S. high-pressure ridge in the central U.S. plains. Maybe it's a combination of the U.S. high-pressure ridge and the Western Canadian drought, and all of a sudden you got fireworks. This is bullish. The vegetable oil complex, including soybeans and canola. Because of the drought in Western Canada, you could see canola, soy oil, soybeans, spring wheat take the lead in the grain complex, and it's going to take the rest of the wheat complex and corn, the laggard, with it. So if you were a bull patiently waiting for something to happen, you finally got it. This is great news. And so give it till mid-July to see what can happen with all of this. Now, if you're watching and you're a member and a client of ours, thank you. If you're not, what are you waiting for? This week, our hot topics were odds of a soybean summer rally and our monthly basis report. Very few people talk about basis. I know farmers sometimes don't like to separate the basis from futures, but we can do that for you. We'll teach you how to do that. You can get a better net price. So don't forget, we also have our app for your smartphone, so you can keep up with all the breaking news. And so you got nothing to lose. Just try our program. Check it out.
Well, you touched upon one of the bullish factors that is affecting grains, and specifically some of those oil seeds. The other one, and looking at the weather maps, and this one's for Western Canada, the drought there at the end of May, we had 53% of ag land in Western Canada in drought. And this is up from 32% the prior month. And many regions have seen 40% of normal precipitation. That's how dry it is. And the drought is expanding, and the rains this weekend, which is expected in Western Canada, with more than 1 inch of rain expected, that better fall. If it doesn't, you've got canola and spring wheat leading the grains complex because of how drought it is.
Yep. This chart shows you that most of the region in Western Canada, the growing region, has gotten less than 40% of normal precip for the month of May. Some areas have gotten 0% for the last 2 months. If you go to northern Alberta and that Peace River country, it took 5 weeks for crops to emerge, and they still barely have come out of the ground because of a lack of moisture. So it's a lot worse than you think it is. Marcus Weather Group says that this could be the worst since 2021. I think it could get a lot worse. Again, as Abhinesh just said, if those rains do not materialize or fall as advertised on the weekend, with this bullish soil biofuel information today, it's fireworks time for Western Canada starting next week.
And due to all that, and everything that you just mentioned, and including the biofuels mandate, which was released today, November canola futures and spring wheat futures could lead the grains complex. Canola futures are supported by, of course, the Western Canadian drought, and also the bullish biofuel policy. From the chart, you could see how high canola has gotten since earlier in the year. We are up by about 25% since that late March period.
This chart doesn't show it, but we're at new contract highs today, and the gap between November and July is narrowing, and I expect November to break to new contract highs and even trade above July. So there's a bull market in canola.
From grains and oilseeds, to take a look at livestock, as we can see, the pork cutout numbers have been climbing. So consumer demand remains strong, supported by demand substitution from high-priced beef for pork, which has been supporting higher cutouts. U.S. pork cutout values in the second week of June surged above 114. And which was a level that we saw only in July of 2023 more.
You can see on the chart that this goes all the way back to 2014 and in that peak where the cutout went to almost 140. And then we revisited that in the early 2020s. And we're doing it again. When you get these spikes seasonally, this will all come to an end in the next 30 to maybe 60 days max. Mid-August can sort of be a late peak for the cutout. But this is definitely driving hog futures higher. As I said earlier, you're accelerating that bullish momentum. So producers need to be watching this very carefully because there's a lot of profit sitting on the table.
Guess what higher cutouts do? Well, they support hog futures, and hog futures are being supported not just by cutouts, but by a rising cash market as well. Like Mo was just mentioning, this could be a repeat of the record year of 2014. So July hogs are up by about $21.38 since the first half of April, trading above 109 and up 25.15%. Weekly close above resistance at 109.65. So that's your key level to look forward to. Would be another bullish technical buy signal. And speaking about our targets, our summer high target of 122 to 123 will be more realistic now that cutouts are surging.
July weekly is more important than daily closes, but the July contract just came short of that close above 109.65, but August did. So I think I don't know where the cutout's closing today, but definitely looks like this thing's moving higher.
And like we had mentioned earlier, and also speaking about geopolitics, the war in the Middle East is worsening more, and that is supporting crude oil prices. So crude oil prices surged due to Israel's strike on Iran, where they hit nuclear sites in the country, and also top military officials were killed in the attack. And Iran has so far retaliated with drones, and it's a tense situation there in the Middle East.
You can see from the chart here, this is July crude oil It doesn't show it in this chart, but we are already up to this 76 level. We're breaking 77. 1 point crude was up $9 to $10. It's backed off, but Iran has retaliated against Israel today after yesterday when Israel attacked Iran. Over the next month, I think this war gets worse. Are crude oil prices discounting a lot of this? They are. So can it go to the 80s? It can. Your local diesel price is still cheap. You know what to do. We got our members in at the low. So here's another reason why you should sign up to our program, because we're booking inputs cheaper and hopefully selling crops at higher prices. So if you want to have your cake and eat it too, sign up to our program. Don't forget, before we end, usually we show you the CFTC chart from all the commodities, but we thought we'd give you a different view today.
Yeah, so Mo, this one takes into account the 4 main grains and oilseeds. So this is a combined chart of corn, soybeans, canola, and Chicago wheat. And just to get into a few of those numbers, as of the 3rd of June, net managed money position in corn was net short 154,000 negative contracts. Soybeans were net long 8,600. Chicago wheat off by as a net short minus 100,000 contracts, and canola close to their record high at 102,000 contracts.
If the funds were not long 110 or 105,000 canola contracts, this chart, this line here would be showing a retest of the lows for the combined 4 commodities. But because of that bullish key catalyst we just talked about earlier about soy oil and U.S. biofuel blending mandates, I think the funds are going to start to cover their short positions for at least the next few weeks. So look for a short covering rally in the funds. Again, if you're from Ontario, don't forget about our tour. Sign up. Love to see you on our 2-week data tour where we do yield checks with farmers, as well as our 2 final events to the tour. And finally, just remember to subscribe. Once you subscribe, you click on all so that YouTube will notify you of all for future podcasts. Until next time, thanks for watching. Really appreciate it. Bye for now.
Nice.